Although it seems like a cold splash in the face, there are many reasons to be positive about the stock market in the coming weeks and months. In the first few weeks of February, the market has made progress, overcoming concerns about Omicron, rate hikes, and inflation. Early in January, the price of a share of Tesla stock soared above $1,200, coming very close to the stock's all-time high of $1,243.49. Wall Street, on the other hand, seems to think the stock is worth about 100 times Tesla's per-share earnings, which is nearly 10 times more valuable than stocks of conventional automakers, although it looks reasonable based on one valuation approach. Wall Street is becoming more bullish on Tesla stock, but analysts' increased optimism hasn't been enough to drive up the price because of concern over rising interest rates. Will Tesla stock continue to hold its current value in the future? Keep an eye out in January 2022 to learn more. Mark Laney, an analyst at Goldman Sachs, raised his price objective for Tesla stock from $11.25 to $1200 while retaining a buy recommendation. Tesla was another of Laney's top picks for 2022. He considers Tesla stock to be the best investment in the electric vehicle industry and plays it in the outperform category. He mentions Tesla's position as the industry leader in electric vehicles, as does Jonathan Delaney, and adds that trends in the adoption of electric vehicles around the world may help the company's sales. The Tesla Corporation Elon Musk, the CEO, told his staff that he concurs with the Cathie Wood-led ARC Innovation F that Tesla is worth $3,000 per share if they perform well. In a recent interview, Wood stated that her base case on Tesla is $3,000 per share. Woods claimed that the primary reason for this increase is their market share, which has increased significantly from year-end 2017 to the present, despite Woods' price tag for Tesla, however, might appear ridiculous. Tesla's share price needs to increase by more than $300 to hit the price target. It is currently trading at $860. As early as 2025, according to Ars Invest, Tesla will produce 5 to 10 million automobiles. Additionally, it claims that Tesla will produce the Tesla Network, a fully automated ride-hailing network that will generate significant revenue with a high margin. He emphasized ARC's revised $3,000 price target in an email to Tesla staff that Electric Musk was able to receive, and he also stated that he agreed with ARC's research. If we really execute successfully, I'll concur with ARC. ARC Invest Musk claimed that a share price of $3,000 would value Tesla at $3 trillion, making it the most valuable corporation in the world. With a market value of over $730 billion, the automaker is currently the most valuable automobile corporation worldwide. Musk has frequently discussed the price of Tesla's stock, particularly last year when the stock was hitting a record high. On Twitter, Musk stated that, in his opinion, the stock price of Tesla is too high. Elon Musk and the Tesla board were sued by a shareholder who claimed that the CEO's erratic tweets had broken a settlement with the U.S. Securities and Exchange Commission. Tesla's market value fell by more than $13 billion as a result of his remark in September. As Tesla's shares increased, ARK Investments reduced its stake in the electric vehicle manufacturer by less than 0.5%. 8,100 shares in all, estimated to be worth $5.76 million, were sold. Now that the price of Tesla shares is continuing to decline, Cathie Wood has been on a purchasing binge. In numerous carefully watched innovation-focused exchange-traded funds, Tesla continues to be a top position. For instance, Tesla is the largest position in the company's flagship ARK Innovation F, accounting for 10.49% of the F's assets. Wood continued by saying that the introduction of new EVs by major automakers will only support Tesla's business plan. Woods also expressed optimism about the commercial potential for EVs in China. The market is starting to rebound, according to Tesla. In reaction to a positive report from investment banker Piper Sandler, Tesla's stock was up 3.1% as of February 14th, snapping a two-day losing skid. Piper Sandler, according to StreetInsider.com, decided to show some love to Tesla this Valentine's Day by reinforcing its buy rating on the stock and increasing its price target to $1,350. This implies that new investors can expect to see as much as a 55% gain on the electric car company's shares this year, updating its valuation to take into account new forecast deliveries. Margin and capex, according to Piper, it anticipates Tesla will earn more cash in the future, potentially increasing the stock's value. Adam Jonathan of Morgan Stanley claimed that Tesla was winning the present race for electric vehicles. Consider the EV race as a marathon. According to his writing, Tesla is leading at mile 21. According to Jonathan, everyone else is at mile 2 or is still tying their shoes. Recent records in car deliveries were evidence that Tesla's position will strengthen throughout the course of the race. He increased his price estimate for the automaker's shares from $1,200 to $1,300 and forecast that 2022 delivery numbers will be around 2 million. Tesla intends to increase last year's 936,000 vehicle deliveries by 50. This season, the operational acumen of the corporation has been the focus of analysts' fervor for Tesla stock. When traditional automakers encountered semiconductor shortages and supply chain delays during the epidemic, Tesla switched between vendors by modifying its software to keep its manufacturing running. In order to increase output, it has opened 2 new manufacturing sites in Austin and Berlin. The bases of Tesla in Shanghai and Fremont, California, will be strengthened by these facilities. The advancements as a whole result in greater operational margins and manufacturing scale for cars. We anticipate Tesla to eventually spend any excess gross margins into product support following the inauguration of the Berlin and Austin facilities. Network development and cost array. The company's automobiles are some of the most popular in a number of nations, including Norway and the United Kingdom. Tesla still has a long way to go before achieving these incredible heights, but the company faces many potential problems that we could see developing in the future. While we have no doubt that Elon Musk will be able to overcome these challenges, it will be interesting to see how they resolve them. For instance, Tesla cars are still too expensive, even with generous government incentives like tax breaks for alternative technology. Even Tesla's new, more affordable Model 3 costs $43,990 before taxes, incentives, and gas savings, which is still too expensive for the majority of drivers. The expense of producing the automobiles is high for Tesla as well as for people who buy them, although these numbers may improve as the company expands. Vertical Group analyst Gordon Johnson estimated that the company lost almost $14,000 on each Model 3 vehicle it sold in 2018. The possibility of Tesla's batteries running out is another potential problem. Lack of batteries to power their goods was one of the early issues Tesla executives faced. The famed Gigafactory being built by Tesla in Sparks, Nevada is intended to address the company's battery shortage. With a proposed footprint of more than 1.9 million square feet, the lithium-ion manufacturing facility will aid in increasing output to more than 500,000 Tesla vehicles yearly. It is unclear if the Gigafactory will be finished on schedule because major projects like these are frequently hampered by logistical or regulatory challenges. The Gigafactory has received approval from the Nevada government, and it is anticipated that it would generate an additional $100 billion in economic activity over the ensuing decades. Additionally, there is more competition for electric vehicles. Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are a few additional firms that want to enter the electric vehicle industry in the next years. If this occurs, Tesla's market share might begin to become competitive. A few tech firms might also enter the fray. Google has also placed investments on the vehicle business, and Apple Incorporated thinks it can compete with Tesla in the transportation sector. Tesla reportedly worries about companies with larger existing customer bases. Although Tesla still has a ways to go, it's a good thing they're already light years ahead of the competition. You could be sitting on a lot of money if you currently own Tesla stock. What do you think the future price of Tesla shares will be? Post a comment below.